Surprise, surprise, surprise. That's what old Gomer Pyle would have said. Hey, the market pulled back the last 2 days and we ended up net of 0.5% for the week. And we ended up with oil at multi-year high and the treasury, boom, up to 4-year highs on the treasury yield for 10-year. Because I'm Mark the Meerkat here. I'm in for D7 with this weekend review, good through Sunday, the 22nd of April. Well, let's take a look at what happened here on Friday in the markets. Then let's pull back, take a look what happens for the week, and then pull back and see where we are for the month now that we're about 2/3 of the way through. And so on Friday, the markets pulled back and dropped back rather hard. We had the Dow down 0.85%, the Dow down 0.85%, but look at that NASDAQ, the QQQ down 1.58%, pulled down by Apple. Apple is the largest cap stock and it was down 4%. It's the largest cap on the NASDAQ, it's the largest cap on the S&P 500, and it's the largest cap in the Dow. So if it's down 4%, you know it's going to pull the rest of the market down with it. And then we have the small cap Russells, which is just only down 0.5%, minus 0.54. Then we had Bank. It pulled back. It went up 0.37%, and the VIX also went up, bouncing off of its lows for the week, up to it closed at 16.8. But still well below 20, where we were stuck above for quite a while. So the fear has come out, but not completely yet. Then we had gold and silver here. They dropped it on Friday, down to 0.7 and 0.8%. But here's that 10-year treasury down to 2.96, a 4-year high. That's right. Okay, let's take a look here at the charts here for the daily charts here. This is the SPY here. And what happened again? Let's go back here. 1, 2, 3, 4, 5. I'm sorry, there we are. The last Friday we had to drop right down and we ended up below the closing line for 2017. Then we had 3 up days, boom, boom, boom. But again, we were going up here, but what was volume doing? Volume was going down right here. See, volume was decreasing as we were going up. That's not a good sign. And then on Wednesday, D7 said, hey, be careful. We are right at the 50%. I'm sorry, we're right at the and on Wednesday, D7 said we're right at the 61.8% Fibonacci retracement from here to here, and we were right at a just about here to this line of resistance here in the symmetrical triangle that we're in. So there were lots of reasons it would probability was that it might turn down. Well, sure enough, Thursday it turned down, and then Friday, bam. And where did it close? It wiped out almost all of our gains for the week. We did end up slightly up, just 0.5% for the week, but look at that. It closed right at the closing line for 2017. Interesting, isn't it? And again, what happened when it was falling on volume? Oh my, look at that. It was going up. That's a very bearish indicator as to low volume on the pull up and big volume as it starts to drop again. So let's just be cautious there and just know that probability wise that we may drop a little bit more given the price action and the volume combined. Now, that's on the S&P daily. Let's take a look here at the Dow daily, and it too was rising on lower volume, but this one dropped here on Wednesday, Thursday, and Friday. It came down. But look at that, on lower volume, although even on the pullback. So this one's not quite as strong a signal of bearishness. It's just doing a little pullback here. So, get a little bit of mixed signals here in the market. Daily chart here on the Qs. Again, rising on lower volume here. And then it pulled back these last 2 days, and what happened to volume? It went up here, folks. It went up here the last 2 days. And again, with Apple dropping as much as it did, it really did affect the rest of the markets, especially the Qs. Then we have the small cap Russell here, a lot more bullish than the other markets in that it didn't pull back as much. It pulled back here twice to the 200 moving average, and now it's in a symmetrical triangle. It rose up here, almost tagged that upper support line perfectly on Wednesday. And what we have here, this is a dragonfly doji, possible reversal candle. Sure enough, bam, bam, pulled back down here on the daily chart. Volume again was decreasing here as it was going up. And then what happened on Friday? boom, a little bit increased volume as it pulled back. So again, a little bit more bearish probability on the small cap Russell. Then let's take a look at bank. Bank, again, where the rest of the market's doing the last 2 days, they were dropping. What happened to bank the last 2 days? Boom! Oh my goodness gracious, these were going up, just the opposite of what the markets were doing. Can't go anywhere without the market. So I'm sorry, we can't go anywhere without the bank. So bank is going up while the market's pulling back. Again, we're getting some conflicting signals here, folks. That just could mean that it's not quite as bearish as it looks on the daily charts for the markets. And then let's take a look here at the VIX. And it was, again, resting up here above 20. Again, the VIX is the fear factor, the volatility index. And when it's above 20, it's very volatile. We're getting 300-400 point swings on the Dow, especially during that time period. Now, for the last week, it's settled down a little bit, dropping. And now it's just going back up, but not in these huge swings and not in a really volatile range. Still some volatility in there. Below 15 is a real comfortable and compliant range, which is where we were for the last a year and a half. And we're not used to this more volatility, are we? And then, so let's, before we go to the weekly charts here, I want to talk about your trading for a minute. Are you like me that I really struggled when I started out trading? And I went to some free webinars, I read a couple of books and figured I could learn whatever I needed to learn that way. And I traded a lot but didn't make a lot of money, or at one point I completely blew my account out and on one trade, and because I had no idea what the risk was. That's when I decided to get the proper education, but more importantly, a mentor, someone that would help me apply that as time went forward. So there's the knowledge, which is about 10-15% of it. The other part is the mental aspect and applying that to your trading. So would you like someone doing that right alongside of you, like a co-pilot, as you're learning to fly? So first, if you're going to learn to fly, you go to a ground school. You learn what you have to learn educational wise. But then, you can read all the books you want about flying, but if you never get in an airplane and fly, are you really going to know how to fly? And more importantly, if you are learning to fly, they always put a licensed pilot right next to you when you're learning. Why? It's risky business flying, right? It's your life is at risk. Well, the life of your accounts are at risk if you go to trade. It's very risky business, especially if you don't have the right education and you don't have someone there to help you. And that's what our mentoring is about. Give you the education, but more importantly, it's the rest of that is applying it, be walking alongside of you as you apply that to your trading to make it improve. Now, where can you find out about our mentoring program? It is go to groktrade.com, groktrade.com, and you can go to right here. It says to mentoring up here, or down here, either one. So let's go to that page for just a minute here. We've just redesigned this so that it's even more complete with any information you need about what our program is. And here you go. As I said last week, 89% of traders do not make money. In fact, most of them blow their accounts out when they're managing it on their own. What would it be like to learn from someone who's in the 11% and have them sitting next to you as you move forward to know what you need to do as a trader to be successful in the longer term? And so now here you can again read all about this. It's in detailed format. Again, I tend to be an analytical, so this included all the information I wanted to know about it before I would even want to talk about it. And what we want to do down here at the bottom is to have you just sign up for a telephone call to talk about your trading, to see what issues are you facing, and do we have some possible solutions for that. And you can then decide whether or not, yes, I do need an education and I need someone to walk beside me as I begin to implement that into my trading. That's what our program is about. There's a class I just had a couple of weeks ago. So we have a online class. So this is an online class coming up next weekend. You could join us in that, or we have Las Vegas, Nevada, with same content, but we'll be meeting in a room together with other like-minded traders, and that's going to be in mid-June. So if you're interested in either of those, you're more than welcome to join us. Now, oh, good grief, there's an ugly guy right there getting ready to trade. So down here, there's a place for you to just sign up, say, hey, I want to have a conversation about this. Find out what happens for you. There's lots of testimonials and everything else, but schedule a discovery call. And again, it's not a sales call. It is a discovery call. We want to find out what problems you're facing, and it's restricting you from being a successful trader over time. And then we'll find out whether or not there's an opportunity for you to be in our program, whether it's appropriate for you to even be in it. So this is Mark the Meerkat, and I'm actually will be the one leading the 301 primarily, and we also have some advanced training that Des is part of as well. But we've been doing this a long time. I've been a trainer of people for over 35 years, and now I've been doing it here with Grok for over the last 5 years now. So it's we are traders. We do this for a living. We're in front of the markets every day. So we're going to give you all the quote-unquote secrets as to what it takes to be a successful trader over time. All right, enough said. Let's go to the weekly charts now. Now here's the S&P chart on the weekly. What do we have here? We're going to blow it up here a little bit so you can see it even better. What we have is a dragonfly doji on the weekly chart. So we're starting to leg up here. Dragonfly doji, that is a possible reversal candle on the weekly chart. And you can hardly see it because the little tiny line there for the doji is right on the closing line. Remember, we closed just below it. And so we are in a symmetrical triangle, and then we have we're going up, possible reversal candle there. But look at the volume for the week. It was lower volume for the week here. And again, going up, getting lower volume. That's not a bullish sign. That's more of a bearish sign. They have the Dow Jones Industrials, the DIA, and same thing here. We have a shooting star, in which just a small body here. It's same thing, possible reversal candle when you're going up. And again, it's right here by the just underneath the closing line from 2017. Just again, that's a little more bearish than bullish. And again, but lower volume as we were going up. Then we have, this is on the weekly charts now, on the Qs, again, another dragonfly doji here. Possible reversal. Now, I say possible, folks, it's just probabilities. Could this just blow up through there? Yes, we have lots of earnings, especially in tech this coming week here. We'll review those in a few minutes. But I mean, the FANG stocks are reporting here in the next week and a few days. So that could move the markets, absolutely, because they're the largest cap stocks on the NASDAQ. The top 5 of them, actually, the top 5 stocks in the NASDAQ from a cap standpoint, their cap, I'm sorry, the top 3 stocks, Apple, Facebook, and Amazon, the top 3 stocks cap-wise on the markets, or is it Google? I don't know, can't remember who the top 3 are, has a larger cap than all of the Russell 2000 stocks combined. The top 3 on the NASDAQ are larger than the entire 2000 Russell stocks combined. Wow. So yeah, could they move the markets? Absolutely they could, depending on their earnings. We'll talk about that in a few minutes. So again, we have a dragonfly doji here on, again, lower volume as we're going up here. Now the Russell here, it is smaller caps, and it's going up, and it too has a shooting star here, possible reversal candle, and when it went up here, and look at that, it tagged this upper resistance line perfectly and then pulled back. So we've tagged these lines of resistance, and then we've pulled back to lines of support and resistance on all of the markets. And so we're kind of, again, in a no trade zone. We don't have a strong trend in the market. So don't overanalyze and over anticipate where the market might go. We know we've had up days, down days. We have up weeks, down weeks. It's been very much of a difficult time, especially for swing traders who tend to be in stocks only, 4 to 6 days is our average for a swing trader. And when you have 1 or 2 days up, 1 or 2 days down, 1 to 2 days up, 1 down, up, 1 up, very difficult environment. It's okay to be in all cash, folks. It's okay to be in all cash. So let's pull back, take a look at the monthly charts, and then we'll look at those FANG stocks here that most of them are reporting this coming week here. So on the monthly chart here on the S&P, on the SPY here, it was coming down, and now we have in this month, again, we're 2/3 of the way through it, the month, it's starting to come back up, but it went all the way back up here, tagged this upper resistance line, and then pulled back here this week, and so we'll see where this is still a dynamic candle. Can't really call anything on that yet. Dow very, very similar. NASDAQ, now this one hasn't pulled back as hard. And again, look at the, right now it's almost a spinning top. We'll have to wait and see. Again, it's a dynamic candle, but not quite as bearish as the Russell here. It pulled back some, but now it's actually much more positive for the months than the other markets, but with another week and a half to trade. All right, let's go to the FANG stocks. So we have to go back to the daily charts here, and the FANG stocks, the big ones, and they're going to be reporting this week. So let's talk about those. So first of all, we have Facebook. So here is Facebook on the daily chart. Now, it's reporting Wednesday. See with the E here, the E, that's Wednesday it's reporting after. Now, what are the expectations? They're going to have a 30% increase in earnings and a 43% increase in revenue. Wow, those are some high expectations. So what if they only come at 27%? Oh, they'll miss expectations. But that's incredible. But again, when you set an expectation, if you even miss it by a few pennies, you typically get punished. Or not by the market, you never know. So again, that's coming up this week. Right now it's basing here. It could be a bear pullback. It could be just basing here, getting ready to go higher. And it's below the 200 moving average, it's below the 50 moving average and the 100. So right now these are in a line, almost bearish formation for the moving averages, and they're kind of messed up a little bit here. So it is a little bit in trouble. But let's take a look next at Amazon. Again, FANG, F-A, Amazon. Look at that, running back up here to near its highs at around 1600, and then bam, pulled back on Friday hard here, 1.9%. But it has earnings coming up on Thursday afternoon. Right there, Thursday, you can see the E down here. So right up here, it's coming back up here to all-time highs, and it's had an incredible run over the last 6 months here. I mean, it was down here in the 900s, and I got in 2 different positions here last summer, and I'm still in those. And look at that, now we're up here in the 1500 area. Wow, nice run. But earnings, what are they expecting? They're expected to be down 19% on earnings and up 40% on revenue. Go figure. All right, so that's what the expectation is. So we'll see where that ends up. That's on Thursday. Then we have Google G on the FANG, and Google L here. They're going to be reporting on Monday after the market closes. So on Monday there's earnings. So look at that, they are basing here on top of the 50 moving average and just below the 100 moving average, and it's stalled right there right now at around what is it, 10.7, around 1080 area, and now their expectation is 20% gain in earnings and 22% on revenue. That's the expectation. So we'll see on Monday night where they report out. So again, these are 3 huge hitters here that are going to be reporting. And then we have, but let's go back to Apple. Apple. Now, what happened here? The semiconductors were reporting this week, and they're actually lowering their outlook, which means that maybe Apple iPhones aren't selling as well as everyone thinks they are. And look at this, it's dropped 10% in the last 3 days and 4% on Friday alone. That's on Apple. Now its earnings isn't this coming week, but it's the week after here on the 1st of May. But so we need to be conscious of that. But where did it drop to? Ironically, look at this. These lines don't make a difference. Big red, the 200 moving average on the daily chart. And look at the volume on Friday. Kabam! So even though it's been up here near all-time highs, 182, 183 area, it's now back down to 165, which was an area it was stuck just above for many months there. And the last of the FANG stocks is Netflix, but it already did report. It reported last week, and boom! Look at that sucker go, and it is now basing up here at all-time highs here above the $330 area. Look at that! It was $180 right down here at the beginning of the year. Look at this! At the beginning of the year, right here. $190. Now it's at $330 area. Wow. Yep. But it did pull back, so we need to manage our stops as we go forward. So this is Mark the Meerkat. I just want to remind you that we are kind of in a no trade area. We were in a mild uptrend, and now we pulled back for the last couple of days. There's some bearish signs in the market, but then there's some conflicting bullish signs in the market. So is this a tough time to make a call to go long or go short? Absolutely. So if you are in trades to the long side, manage your stops. You might want to be a little tighter than normal. If you are short the market, then manage your stops. So you always want to manage your stops to limit the amount of risk that you have in your trade at any one time. Well, have a great week trading. This is Mark the Meerkat. Trade well, and may your winners run.